We're going to look now at question 2, which is called Bagshot. So make sure you've had a look at the question and done some planning before you listen to this debrief. The very first requirement, which was for 6 marks, was a lovely question about the accounting treatment of restructuring costs. So, knowledge-wise, of course, restructuring cost is associated with the accounting standard on provisions. Provisions is not a new standard for you in SBR. It's one that you've met before, isn't it, in financial reporting. So, technically, that's a very, very straightforward question. So, as always, get down the basic knowledge and then try and apply it to the scenario. So when we talk about provisions, the basic knowledge I'm sure you have within you, but when we talk about provisions, you know the sort of words that are associated. We recognise provisions if you can make a reliable estimate, if the outcome is probable. So these are all words that are second nature to us. If there is a present obligation from a past event. So those words would not cause us to struggle. When you come to read this particular scenario, it doesn't sound as if the thing is probable. It doesn't sound as if it's resolved. Remember that for provisions there must be a legal or constructive obligation. And particularly when you talk about some kind of reorganisation or restructuring, what you're looking for is evidence of a detailed plan. And of course that plan must have been communicated to those affected. Another way of saying that is it must create a valid expectation. So if you haven't said to the staff, you're all done very well but you're going to be fired, you have not yet created the valid explanation. So it must be communicated to those affected, and that's not happened in this situation. So in this particular situation, I can say the staff have not yet been notified. The staff haven't yet been notified. Therefore, you must not recognise a provision. Good basic knowledge. In addition, of course, it's perhaps worth saying that if there is some kind of announcement after the balance sheet date, it would be a subsequent event. It doesn't tell us about conditions at the balance sheet date, so it's a non-adjusting event. In other words, it must be disclosed. So I might say as well, if it is announced after the soft P date, which it might be, you would disclose it. The reason that you would disclose it is that it would be a non-adjusting subsequent or post-balance sheet event. That's not hard, is it? The examiners are saying every time. People are quite good at calculation, but they've not necessarily got the basic knowledge. That's not the knowledge that you get in SBR, it's the knowledge that when you did the exam underneath, which is financial reporting. And that's what you might need to work on. So 6 marks there on the restructuring cost. Secondly, there was a question around stewardship. If you look at the question on stewardship, it's 4 marks. So what is meant by good stewardship, and then whether 2 things are examples of good stewardship. So you must break this apart. What is the meaning of good stewardship? And that's where there would be open marking. Because I guess there are a lot of things that you could say. The key thing to me, though, is things like protection of the assets of the shareholders. If I go away and I ask my neighbour to look after my pussycat, then I expect when I get back the pussycat to be well and purring and well fed. So have the asset been looked after? So it's that kind of thing, isn't it? Maybe it's things like faithfully reporting what has happened. This is what we did with your assets in the year. But I'm sure we could get something about that. And then it asks, doesn't it, about 2 specific examples. It says, first of all, is having a reorganisation an example of good stewardship? And then secondly, it also asked us about whether recognising that provision in the accounts is good stewardship. They're 2 completely different questions. Having a reorganisation, well, you can argue this both ways, I think. But often, of course, if the business needs reorganising, if you don't reorganise it, that's bad stewardship. So you might say, well, reorganising is not a bad idea. So you might say it's necessary. Again, if, for example, the business is loss-making, you do need to sort things out. Is putting the provision in the accounts good stewardship? No. It's not allowed by IFRS. The idea of international standards is to give fair presentation in the accounts. If you're not giving fair presentation, it sounds like a bad plan to me. What else were we asked in the question? Well, the next 3 marks were about the disclosure in respect of the acquisition of shares and whether something is a related party transaction. Well, you must disclose related parties, again, if, transactions, if there's something significant there. And this is specifically, isn't it, about someone called Mrs. Shaw. So you know that related party is associated with words like significant influence or control, question, does Mrs. Shaw have significant influence or control? Well, she kind of comes into the scene for 2 reasons, doesn't she? Because she's wearing 2 different hats. Mrs. Shaw is wearing a hat because she's a 5% shareholder and she's wearing another hat because she is the spouse or wife of a director. No, he's not a director, actually. I think she's the spouse or wife of someone who is described as the, what was the word in the scenario? I think it was the head accountant or something like that. Yeah, she's also the wife of the head accountant. Well, first of all, if you owned 5% of the shares, would you be able to exercise significant influence? And the answer is no. So again, you want something closer, don't you, to 20%. So I can probably say here that she would be unlikely to exercise significant influence. She could go to the general meeting of shareholders. Perhaps she could put agendas on the items on the agenda. But it doesn't mean, again, she could control the meeting. So she's unlikely to exercise significant influence as a shareholder. Well, wife of head accountant, it's perhaps a bit more debatable. So I'm going to leave that a bit open. So debate whether she is, again, close family. That's the word in the standard, isn't it, of key management. It's only 3 marks and you need to reach some conclusion. I think in the answer they suggest that her husband is head accountant but not a director, so therefore not key management. Well, it's a possibility, so you could probably come off the fence either way there. But what they're looking for is the knowledge. So if I was marking your answer, I would be looking for words significant influence and control. I'd be looking for the fact that you'd use the fact that she owned 5% of the shares. And I'd be looking for the fact that you'd use these blue words here, close family and key management, and then had a debate. So yes, you would then need to reach a conclusion. I'm not going to do that now because you can come off the fence either way, probably. So the answer suggests not related party. I'm sure you could argue that the other way round as well. For the remaining marks of this 20-mark question, we were then asked again to look at the ethics. And remember, this is ethics from the perspective of Mr. Shaw. Notice again that there are, of course, 2 presentation marks here. There are 2 marks. You get those 2 marks, extra marks, for clarity. What does that mean? It means if you apply, again, if you apply your knowledge to the scenario. Well, I won't spend long talking about this because it's a very straightforward part of the question. And so the key thing is, of course, isn't it, is to bring in relevant knowledge, relevant principles, and relevant threats. So in terms of relevant principles that you could apply to the scenario, you could debate if Mr. Shaw caves in to management. You could debate his professional competence. You could debate his integrity if you consider he's not being straightforward. In terms of relevant threats, he is unquestionably being intimidated by management. So again, there's definitely an intimidation threat. That's coming downstairs, isn't it, from management? You might even say there's a self-interest threat. Because he wants to please his wife, as you would. In addition, of course, there are other points that you could debate there. Because if you have a company, then you are actually he's speaking about the affairs of the company. I suppose he's breaching confidentiality. So there's another principle that you could bring in. If the company is listed, it might even be insider dealing. There's plenty to say, isn't there, on that particular question. But don't forget your free mark, which is always to say that you must comply with the ACCA Code of Ethics. That's a point that we always make in any ethics scenario. What the marker's looking for, though, is that you actually take a threat or you take a principle and explain how it applies to the scenario. So if Mr. Shaw does what management says, this is not straightforward business conduct, it's a breach of integrity. As soon as they see that you're writing like that, that's what makes sure that you get those couple of extra marks. That's all I wanted to say about question 2.